Welcome to Trading Lounge and the Australian report for Tuesday, October 19, and starting with the ASX here. There's two things that can occur here. Is that one of them is that we have wave 4 in place here, and we can look at this as wave 1 and back for wave 2, and we can look at all of this as bullish. Second thing is that if we don't consider that wave 4, then we consider this an A and a B and a C over here, and then coming down into this wave 4 over here. This is the same sort of thing that we're looking at with the US markets as well. So one way we've been looking at it is that from B to C here, and the same within the US, once we've got our 5 waves in place, anything above that, that would make it bullish at that point. So with all of these markets, with the S&P 500 and so on, we're just coming to the top here on the S&P 500. So it will probably take a session or two. I mean, obviously the markets look bullish, and yeah, but I just need to make sure, that's all. So another way of doing that was to have support on the 7,400, which is the 50-60% retracement level. But if I go in here and just talk about this for a little moment, looking at from wave B to C here, where are we on the daily? So we'll go to the 4-hour chart. So what I was thinking is this little move, a little bit complicated, but this little move in through here, that's in 5 waves and it's finished to that C wave there. So I'm thinking that any move above that would put us in a bullish mode at that point. Yeah, I can still see that we need 1 and 2 and 3 and 4 and 5 here to have that first high above the level. And we'll probably get some sort of classic trading levels pattern here before we sort of head up higher. So yeah, we could put this here in all practicality. To have that finish off a little bit better, and that would be it over here. But the other point is that if you have a look at the US market, the US S&P 500 is finishing off now, kind of thing. So we'll know from the US markets before we know from these markets here for this. So just going in a little bit further on this now. Yeah, so I just want to talk about this little move in here. So if we look at this, I did change this back over here, but an A wave here, an A and a B and a C for this one. And then I looked on this on the tick chart here as 1 and 2 here, then 1, 2, 3, 4, 5, the 3rd wave, 4th wave and 5th wave here for that. So any move above that, I think that we can go bullish at that point. But as I just mentioned, we probably need one more classic trading levels pattern at this level before going higher at that point. But it shouldn't stop us at this point, and we'll get clarification on the S&P 500 before we'll get it here. So on this pullback, I think that we can look to go long here. One of the other things that we're looking at too with all of this is that we really need the banks on side. So yeah, let's just go over to the bank. So look, nothing's really changed here except that let me just check on this here. If we take that low to that high, that's at the 38.2% retracement level, so that's all good. So if I label this, let's just relabel this here for a moment. It's probably not the right labeling for all of this, by the way, but actually I'll just leave those there. But it will just give us a little bit of an idea that could go to there. We don't want that. Actually, we don't want these here now. I need to put them up a level. So because the market reacted from this level, that means we're going to be looking at a classic trading levels pattern and not like an overshoot. Didn't go straight through it. Do you know what I mean? It's reacted from here. So we'll get that kind of, and it can come down and retest it here as well for that. So we need to make that a little bit more obvious and so on. But that we should really put that there. In fact, we don't need that one. We need a bigger one. We need this one here. And I'll just put it as a B wave over here. And that means that if I just borrow these for a second, I'll put the A wave there. Is that a B wave? Yeah, borrow that. And then we can put a C wave up here. I'll put that over to the right. Just to sort of play us out here in a larger correction. This can obviously be wave 1 here. We've got that as wave 1 in the US. So wave 1 here, ABC for 2, and then up for 1 and back for 2. But yeah, I just think that from the low here, if we look at this as a blue wave A, blue wave B, and a blue wave C up here, and the C's got 5 waves in it, 1, 2, 3, 4, 5 at that point. Look, it's just a safety guard thing, and it just means that we're not high on ourselves when we get to this point. Do you know what I mean? It's like we need that one taken out to just give us another layer of security on to the upside count, that's all. Okay, so that's where we're up to. So we need the banks to pick us up from this point. Yeah, okay, so let's go over and have a look at CBA for a moment. So let's just talk about CBA for a moment. So first of all, there's further upside to come here, like a fair bit. So I'm looking at wave 1 and 2 here, and then going up for 3 here, then 4, and then 5 up here. So that's going to take us much higher. Okay, that's the first thing. So then we're looking at 1 and 2 here, and 1, 2, 3, 4, 5 for the third wave. So I'm trying to figure out the fourth wave here. I mean, yeah, that looks all pretty much sort of okay at this point. I mean, maybe I have to put that here and that here and then put that there. I'm just not quite sure about how this plays out here. I've had this up here to keep us safe at the 61.8% mark there, and that's at 105 roughly. So I've always mentioned that if we take the top out here, then we can go long from that point. And then we were looking at this move coming up here as a potential impulse wave, and then an A and a B and a C to pull back. That horizontal line is the 61.8%. So if this top here is taken out, this one here, if the market moves up and takes that out, what it does is it forces this here to be an ABC correction. And then if that's the case, then we're going to be going up from that point. Then we'll be looking, you know, much further up. Okay? So if that's taken out, that's the trick. So then you would think to yourself, oh, can I get in early? And possibly, but that's where the risk lies. So first of all, from this high to this low, it's closed around the 61.8% mark. So we could say that if we took that top out, we could probably get a small position. But let's just go to the tick chart and we'll look at 10 ticks at 5K, maybe in here. Let's just see what... This is the A, the B, and the C that we're looking at here. And I have to say, that looks pretty impulsive here. That looks pretty impressive. So the way I could count this so far, do we need to, oops daisy, can I use that low or that low? I mean, I like that low because of 1, 2, 3, 4, 5, where this one's only 3, so that's probably the low there. So 1, 2, 3, 4, 5 for wave 1 and 2 here. And yeah, I got to call that wave 1 and 2 and that wave 1 and 2. Obviously the third is here because that's where all the gapping is done, but do we call this 1 and 2 to here and 3 to here? That's what I've got to figure out, and then 4, and then you can see the little 5 waves here. That would make wave 1 at that point, right? So then this one here would be 1, 2, 3, 4, 5 for the third wave. This is the fourth wave, so that's 1, 2, 3, 4 here, and then 1 and 2, and so we're going to be up here. But the situation is that it certainly looks like 5 waves, but we'll have 1, 2, 3, 4, 5 here, and then we're likely to have some sort of correction, because as you understand, we're coming into Monday and Friday and Monday are the bullish days. Tuesday gets a bit of profit taking in the beginning of the session in the indices, and that obviously comes in from the banks as well. So Tuesday's the first day that, let's just go with it. Friday go on the bullish weekly cycle. Friday is strong, then Monday's going to be strong. We see a bit of profit taking on Tuesday morning and then the trend resuming. And then Wednesday's like a V-shaped day where it's down in the morning and then up in the afternoon. And then Thursday can open higher, but basically is a bear day. And then Thursday afternoon it starts to sort of firm up a bit coming into the Friday, and then we see Friday and Monday being the bullish days again. So it's always about getting through. I mean, when I used to be doing day trading on the SPY, which is a futures contract on the ASX, well then we would start buying late Thursday afternoon, and then we would start taking profit on the Tuesday morning, and then going through that cycle and watching that Wednesday and Thursday. So I think that's what's going to happen here. It does appear that, as I've just mentioned, taking out this top here, that confirms that this is an A and a B and a C correction. But I can see from this move up here that we're going to be sort of impulsive. So I'll leave you to think about that for a moment, because what will happen eventually is that we will have 5 waves up. Let's just take it up to 105 here, okay? And then we're going to have a pullback at that point. So if you went long now, you would probably have to hold back into 103, 104 kind of area over here for that. Do you know what I mean? I have to clean this up here now because we can look at it again tomorrow. It's just that I don't use the 20-tick chart too much, or 10-tick chart on this, but I'm going to start using them more because I can see more detail. But yeah, that's the picture. Okay, so if we just go back to the daily chart for a moment and come back over here. So we're thinking now, I don't know where this wave 4 is. Okay, so that's one of my problems. And then what we would have to do here is we would have to look at this being 1 here. Might as well just put it together a little bit, because if that's what we're looking at, and then we can look at this here being 1 here and 2 here. So it's kind of getting loaded up, you know what I mean? So we still need evidence for this to occur, and the evidence would be taking out that top there. But we also understand, that was the ABC that we looked at, but we also understood too that this will probably come up close to 105 or 105, and then it will pull back. In this move, if it moves to 105, just assume then that it's in 5 waves. So then you could buy the pullback here before going up again. So you could potentially get it you know, in this space here somewhere, wherever that may be, as a little ABC in here somewhere. Perhaps we can look at that tomorrow. But yeah, look, the takeaway here is that it does appear the banks are are shaping up a little bit for this. I just want to have a look at XXJ, which I have on this charting program. I don't have. Okay, well that's it, because yesterday we talked about this, didn't we? This is the banking sector. So we've got this wave 1 here with an A and a B and a C. Then we got wave 1 with an A, B and C, and another wave 1 and a little A, B, C. So we've got this building process here that's sort of popped through now. This move here is in 3 waves as well. Maybe it's in 5 waves, and it should be in 5 waves, but I can't see it. It's not going to give it to me in 5, so we'll take that as being corrective, and we'll push up. So all good on the banking sector, so to speak. Okay. Okay, so that's the banking sector. Let's have a quick look at ANZ, because that's going to pop. Yeah, that's popped. Whoops, with Daisy. So did that. Let's just find that again. So now you may be long in this market. So what we need to do here is we need to copy that. We need to put that under there. I mean, it's an obvious place for a stop, and everybody will know that, but technically it shouldn't be. This is corrective across here, and it shouldn't be breached at this point. So there we go. We're setting up for the banks to go long, and yeah, we want the ASX200 to follow that up. So this has all really been lifted from the US markets. This is where this rise is coming from, because it's coming in the off hours, you know, most of it, not all of it. I mean, you know, give it a bit of credit. But yeah, anyway, just coming back here, the 74. So basically everything looks bullish, but I need to confirm things, you know. So by all means look to be long, but don't overdo it just yet, put it that way. I think we can sort of put that in there a bit more now. Yeah, so we just got to get past that. Okay, so have a quick look at India from this point. So India's just chuffing along, so it's just going to continue going higher. That even needs to go higher still, because that will be 1 and 2. There'll be 1 and 2, and here's the third wave. So we're going into some other third wave here, so we can go further up here. Of course, the 19 is the next serious sort of number, but obviously between 18 and 19, you've got 10, 20, and 30, and then you got 50, the midpoint there, where we are now, and then you'll have 80 in here. So basically between 18 and 19, you just count 1, 2, 3, 5, and 8, and then you're there. So we'll see a little dance across this level, and then further upside at that point. But 1, 2, 3, 4, 5 just for that. I just can't it can't be wave 3 there either. But anyway. Now China, how did iron ore do first? I'll just have a quick look at iron ore. So iron ore's, yeah, it's not looking bullish at that point. We'll come back to that though. So China, the A50 here. As I've mentioned before, we don't really have nice impulse waves pushing this up through here. And I didn't think ever Evergrande was going to be such a big deal because you know the loans and all the rest of it were the offshore loans that it had were quite minimal really, but as you probably know, they're doing the right thing, which is the only thing to do, which is to give people their homes first. They're going to pay those out first, and they're going to pay local investors, and they're going to pay overseas investors. And I would do the same as well. I would make sure that people had homes, and the only way the company's going to survive is by doing the right thing, because if they paid off their outside creditors first, well then they'll be in an empty hole and they would just dig a deeper hole. So I feel like they're doing the right things, but what sort of concerns me a little bit is that so many companies are biting the dust, you know, and that really comes through to the construction industry, the materials industry, and you know it kind of connects up because the housing market in China is the biggest market in the world. It's $62 trillion. So if that kind of wobbles, you know, on a lower level of construction materials and jobs and no jobs and all those sorts of things, I mean, that's got to show up, you know, it's got to show up somewhere, you know. So yeah, I don't know how that really affects everything that much, but anyway, so this little move here coming up through here, I can see that will be in 5 waves. So we'll just allow this to correct, and we'll see if it pushes up. It should push up, because even if we take this as the low here, an A and a B and a C wave here, that means it will be 1, 2, 3, 4, 5 here, you know. So we still need another move up here. So we'll see if that pushes up. And yeah, I mean, iron ore is much the same as well. So let's have a look at iron ore. So I'll just go to the intraday with the iron ore. I don't know if I had it on tick or 1 hour chart, but must have been the hourly chart, but I'll just double check. Oh no, I had it here as well. Okay, that's good. So yeah, I mean, I'm looking, this is the move up off the low here. As I've mentioned many times, it's very difficult to get 5 waves out of this move here. So it's always counted better as an A and a B and 1, 2, 3, 4, 5 for the C wave here. And then this move here, maybe I need to put these in green, but the thing is that it's looking bearish, you know. I could probably, you know, get a correction out of it, but I have to, you know, use my first instinct. So this is obviously impulsive here by the looks of it. So I was just wondering to see, this is all, the box here is the 61.8% mark. So we're going to see it stall here anyway. It doesn't mean that it's bearish or bullish, but it'll give us an idea of the patterns at this particular point. But it is looking like we've got 5 waves down here for iron ore. That's what I'm thinking. So I couldn't really turn bullish unless we're back above the 61.8% mark from this run here, and that would bring us up at these old highs through here. So yeah, back above the 750. We can't be, you know, we couldn't be positive until we got back up above here for this. I mean, that doesn't even count very well at that point. Anyway, yeah. The takeaway from here is iron ore is not bullish at this particular point in time. Okay, so let's move on to next one is gold. So gold's got more of a bearish connotation to it. This is our bullish count here, and I suppose in one way that mentioned yesterday, it's really this low, this red line here and that low there. If that's breached, then it makes all of this as a corrective rally, and we'll be coming down further at that point. So the 1750 needs to stay, the market needs to stay above that. In fact, the market really needs to stay where it is here. This move down here is looking like 5 waves, so what we're going to be looking at here, I guess, is some sort of rally back to the 50-60% mark. And any rally in here will start to give us once we see this move up here, because if that's 5 waves, then we should see an ABC back up and then down again. So then once that gets up there, then we'll put a green line under here, and then we'll also put one up under here as well, and we'll get there. So we'll need to look at the short side, but we're not there yet on the short side. So this is the short side here for this that we talked about yesterday. Clean a few things up here. But in a nutshell, I was looking at 1, 2, 3, 4, 5 down here. I need to put them in green, but it doesn't really matter for the time being. We don't need that. So what I was looking for is some sort of A, B, and C back up here, and I just wanted to see that, and then we can start looking at going short here if indeed that's the case. But we don't have that. Don't have that in there just yet, So once that pushes up there, then we can put our orders under that low once that pushes up to go short, because we don't want that being breached again. Just in case I've got this, because basically GDX is holding up well, Silver's holding up well, everything's holding up well. It's just that this got hammered. I don't know the reasons why. I'm not really into the reasons of why. For markets anyway, Right, yeah. The takeaway. I mean, I was never happy with this as a wave 2 here. I just wasn't happy with that, because it was an expanded flat almost, and the spike in all of that. But I suppose there's an A and a B and a C coming down here, and just ignoring that and putting the B wave over here is what I would do. But too many other Elliott people start chucking stuff at me, so I've got to put it up there. But I do see it as an A and a B and the C wave coming down through here, and I'll just click that off there, but it's probably not the right thing to do. So to have this up here as wave 1 and come back as wave 2 is okay, but I'm not really getting an ABC pattern in here. I did pull it apart, and it just seems, whichever way I looked at it, just seems better as an impulse wave. And then when we go back to the daily chart here, this is the bigger bearish picture here. So the A wave here, then an A wave here, ABC for the B wave here, and then up for the C wave for the B wave, and then down for 1 and back for 2. And then we're looking at this here as wave 1 here, and going back for wave 2 up here for that. So that's what I'm thinking on the bearish side. I mean, if that low's taken out here that I talked about at the 1750 area, then it forces this to be a 3-wave correction. There's no other way for this but down. Anyway, we're just still waiting. We'll wait for that. And this is silver. So silver's holding up okay. I won't go into that, but this is a 1-hour chart for silver. So it hasn't dropped severely like gold. Now, copper. So we've been looking at copper being bullish, and we've had this really nice strong move here, which we probably now need to have a look at. It's probably wave 3 here and wave 4 coming back here. It's a bit of an overshoot pattern. It didn't stop here, so we just need to be a bit mindful that it can come back down to here before going off again. Or another way to look at it is the 38.2% retracement level down to this point. But I don't know, I haven't actually counted that up there yet, so I'll have to do that. So if anybody's done that, then that's good. So I don't know if that wave 3 top is in there, or we've got another little move over here for that. I'm not quite sure about that. But it's just been natural to go up here, hit supply, come back and hit the biggest number, consolidate, gather some energy, and then continue on its journey at that point. So we'll pull that apart tomorrow and have a bit of a look at that. And it's not going anywhere for the time being. I mean, 1's the strongest number, so it's just sitting there. We need to look at gas. That's on NYMEX, isn't it? I think futures for gas. I'm not a gas person. Where are we? Energy. I think it's NYMEX. So let's go back to basics here for a moment. So we've got wave 1 here and 2 here. And 1, 2, 3, 4, 5. So that would leave us, I know the 32%, if I took it from here, the 32% will be higher up here. If I took it from here, that would still be about where it is. So I think we'll have to use the wave 4 of 1 lesser degree rather than the 38.2% retracement level. So that means that, well, anyway, between $5 and $4.80, because when you, what's below $5, well, so anyway, the 4.8, and then you got group 2 there, the 772 and 65 in there. We can have a look at that in a moment. So we need to look at this correction. We're going to call the top in on this one and not this one. It just makes it a little bit easier, and it's probably right. Let's just go to the, was it the hourly chart or 15-minute chart? That should do, doesn't really matter at this point. Okay, so let's just work with this for a moment. So that's our top over there, and we need to get, there's my little Elliott tool, so we need to look at this here. There's the A wave, the B wave, and probably the C wave to there. And so also when I'm using this on TradingView here, I'm using this as minute degree. So really, just to let you know, even though I've got it on micro, because if I use minute here, they end up being really quite big, and that kind of like is a bit clunky for me. So I'm just using the micro there just to let you know. But it is minute degree that we're looking at, because we're looking at minor wave 3, minor wave 4 here, and then moving up. So the next degree smaller here would be this one, so we can just remove that. I'll just leave it in blue, it's not a biggie. So that would be under the minute would be minuet, so we can use that. So this will be the 1, 2, 3, 4, 5 in here for that. So I think that we're nearly finished. I can see that this needs to finish off as well, so we'll bop down here a little bit and then bop up. So we do need to get an impulse wave to confirm this, because could something else be going on? The thing I like about this, by the way, is that this move down through here, right, that's in 5 waves, right? That move, that's 1 and 2 up there, and then 3, 4, 5. So really, we've got this here as an ABC pattern. So that tells me straight away that, obviously tells me straight away that we're in a wave 4. But secondly, it tells me that, and more importantly, it tells me that we're in a corrective move, because we're not like in a bear market, because a bear market doesn't have 3 waves in its first leg. I mean, it could, I suppose. But yeah, this is a pullback. This is buying the dip. So we were waiting also for, this is obviously dropped overnight. So that means if I go to WPL, that I've just been using as an example, as you know, we were looking for the top here for this. So today, hopefully, maybe we'll see this make a bit of a move down here in some sort of C wave move down here, do you know? But what it does at the end of the day, it also leaves us with that top there, which will be our long trade at that point. But we'll try and get, or put that there, but we'll try to get that better. I mean, you could just buy the pullback. It's okay to buy it down here. I was just hoping that it would come down, but it's reluctantly, it's not moving off that 25, you know. And Santos is the same as well, not moving from, this is just 1 hour chart of Santos. We're not getting that deeper move here. And also we've got 3 waves in that move as well. It'd be nice if it can drop here so we can, you know, pick it up lower in all of that. Okay, so anyway, that's the gas, and we need to do the oil. Sorry about the oil, and crude oil. So we're looking here at, if we look at this as wave 4, we've got 1 and 2 here, then 1 and 2 and 3 and 4, and then 1, 2, 3, 4, 5 here for top of the third wave. So if we take the low of wave 2 here to the top of wave 3, that brings us down to 38.2%, which is down at the 7730 sort of area. Do I have this on the hourly chart? I think I'm on the 4 hour chart. So yeah, so this just paints a bit of a clearer picture here. So 1 and 2 here, 1, 2, 3, 4 here, then 1, 2, 3, 4, 5 is probably the best fit for this. The little move coming down through here, it does look a little bit impulsive, doesn't it? So let's just have a look at it on 100 ticks. That's it there. So yeah, looking pretty impulsive. That's the high. Got 3 waves in the first leg. That's a bit weird. Okay, we've got extra things here, so we'll have to take that as 1 and 2 here, and 1 and 2 here, and that's 1, 2, 3. This is all of 4, so that's an A and a B and a C for 4, and that's 1 and 2. It's really dragging on here, isn't it? Wow, is that all that? So is that all the third wave to that point? Or is that it? It's an A, B, C, and then 5 here. Well, in that case, let's just... So what we could probably say here is that if the 8.2 becomes the support, then we'll probably go up from that point, based on what I can see here, because that's not 5 waves all the way to there. That's just not happening there. But I wonder if this 1 and 2 here and 1 and 2 here, and I mean the third wave's not a problem. We've got 1, 2, nice strong third wave here, then the A, the B and the C for the fourth. And then the 5th wave, I'll probably have to take it. Looks like 1, 2, 3 and 4 and 5 to there. Okay, so that's what that is then. So I'll just remove that. That's to there. That's the 5 waves to there for that one. I'm just trying to get another one that will take me to here. Or do I need to rustle those in at that point? What would that look like? Can't put that there because of that. But then that would leave this one to that one, and that one to that. That's the only way I can see 5 waves occurring here. And if that's the case, then we'll get a move back to the 50-60% mark at that point, which is here. So yeah, we can't go long until we're above 82.50 in this case. So just looking for the backup point here. So what we could say, if we got a classic trading levels pattern here, then you'd probably need to be long or out of your short trade at that point. But otherwise we can look at 5 waves moving up and then coming back down at that point. And in coming back down, I'll just leave that there for a moment. So this move down can be counted as one. So we'll go back for two. I don't know if wave 4 is going to have the A wave as 3 waves or 5 waves, you know. I don't know. But this here is also a classic trading levels pattern where you got the arrival, the reaction, the first high above the level. So where we are at the moment, if that's the $80 mark here, we've had that, we've got that, and now we're about here in that. So it's pretty logical that we'll see some further downside here, and we have seen downside with gas, so maybe both of them are sort of on that sort of, you know, that correcting space. But I have to say the market's quite bullish really, because normally when it would come to the 80 it would just react straight away. I mean, here it didn't even get to the 80, but that's a long time ago, so it's a different story now. But the fact that that's pushed up quite high there, it's still given us the arrival, the reaction, or even this one, but I'm going to take it from this one because that's in 5 waves there. So yeah, expect the market down lower. If the top gets taken out or the 82.50 finds support, then the trend is still to the upside at that point. Picking tops is dangerous, but in this case, with the classic trading levels pattern sort of showing up here, then we need to be mindful of further downside for that. Okay, so let's have a look at currencies. So that brings us to the Australian dollar. So if I just go back to the daily chart here, I mean, obviously a lot of this rests on the US dollar index, which we'll look at the moment. So I don't know if I've got this as an ABC here, but I don't know if we need to look at this as the 3rd wave and ABC for the 4th wave and then down for the 5th wave. I don't know that yet, you know, or do we just continue up here? So what I was doing is tracking 5 waves in this move here, because if this was some sort of A wave, B wave and C wave up here, after 5 waves up here, then we can go long. So our job is to count 5 waves here, and then after 5 waves we get a correction, okay? So if we get a correction and go further up, then we need to be long. So that's kind of what I'm focused on at the moment with this. I think it was on the hourly chart, yeah. So it's this 5 waves up that is our focus, because this will help us in the bigger picture at some point. So that wave 4's occurred now, so that's all good, and we're looking at this wave 5. How far that will go, I don't know, but we need to take out that top there. This is the length of wave 1 here, so we can always just use that as a bit of a starting thing. So that takes us to 75, because to me it's all about the 75 here anyway. So once we finish this 1, 2, 3, 4, 5 here, then all we have to do is just wait for a correction. Let's just move this for a moment. So we don't know how this is going to play out here. Will it reach 75? Will it go past it? Don't know. Looks like I've got wave 1 and 2 and 3 and 4 and 5, whatever it is. But the thing is that this will either pull back to the 50-60% retracement level area or whatever, and then move up from that point, or it's going to have this 3 waves down and then fail here and move down lower at that point. So that's what we'll need to look at, and then wherever this may be, if it's under the level, it's under the level. If it's above the level, it's okay, but it's that B wave there that we're looking for. So if we just put this in play now, then we can yak about it as it goes on. So I don't know if it's going to be an ABC, but if it's going to be a B wave and we take the top of the B wave out, well, then we have to be long. Okay, that's it. Pretty high tech, but yeah, I don't know the bigger picture, but I know the smaller picture. Rightio, so let's have a look at the dollar index. Okay, well that's a bit of a bearish connotation there for that then. So I know this is a little bit messy, this chart, and hard to sort of figure out. But in a nutshell, what I was looking for, we've got wave 4 here, and then got wave 5 of C up here. Now we had 5 waves down in this move here, so I thought, okay, well then I was looking for a B wave and another 5, but then we got this move. And I suppose it's possible to look at this as 1 and 2 here, and 3 and 4 and 5 here. It's also possible to look at it as an A wave, a B wave and a C wave, and it's got a bit more credibility as that, but at the same time it has taken out the top here. So if it's a B wave, then this here was going to be the C wave. So an A wave here, a B wave here and a C wave here for this wave 4 or A wave 4, and then we'd want to see it push up. But I'm looking at this here, I'm thinking to myself, well, that looks a little bit corrective at that point. I mean, we could look at it as wave 1 and 2 and 1 and 2, but taking out these lows here would force it to make this be corrective at this point. So then I think to myself, well, okay, well, what happens if we are going down? Well, then that means that I need to put this over to here, this over to here, and then that would still just give me wave 3 at that point, and then I'm left with wave 4 and still got wave 5 to go to the upside. So what about if this is just another little A wave, a B wave and a C wave coming into this, into this space here for this? So what we don't want to see, I mean on the bearish side, this wave 4 here of the 1 lesser degree, if that becomes the resistance, because I just need to allow a little bit more time for this to come down. I don't mean to put it in green, but don't put it in green. So this could be an A wave, a B wave and a C wave, just piercing there and then going up from that point. So I just got to make sure, So we need this other little low in. So if we get 1, 2, 3, 4, 5 down here, let's just leave that there. And then the 5 waves, then we can go short under that. And that means that we can go long on the other pairs because we'd have a top in play. So I just want to give it a little bit more space and time to resolve itself. Just one other point here, if we take the low of wave 2 here, because that's what it's all about, and we go up to here to the top there, then the 38.2% here comes across here and comes right in on that line that we've just pushed there, and I've allowed it to come down a bit. So let's just see if this gives us 1, 2, 3, 4, 5, because that will either be the A, the B and the C, and then we go up, or that 5 waves down here only rallies back up halfway and then rolls over and comes down and triggers our short, and then we're on our way down here further. Okay, so yeah, I mean, we're just gathering evidence, but it does look like, well, I don't know if the Australian dollar is going to push up yet. We have to go past those 5 waves, but it's a possibility, isn't it, that it could push up, but then we would want this to push down. So yeah, kind of all fitting in there nicely. So where does that leave us? It leaves us with stock, and the problem we know that most of the things are looking good. The US BHP here. So we're going to see oil correct, gas is correcting, copper is going to correct back a little bit for a few days. The iron ore is the problem for BHP, of course. But I have to say, coming from the low here and looking at this as 1, 2, 3, 4, 5 for 1 and ABC for 2 here, I'm a little bit unsure about this move up here. I don't know if that's right. I can't see inside the gaps. I can't figure out some of this. I mean, this could be 1 and 2 back here again as well, or this wave 3 might be sitting up here. But the good news is you see how that came up there and is testing that high there. I don't know if it went through or not, but it's pretty damn close to it. Oh, but it's okay because that's in 3 waves, so that's cool. That top could be taken out. So yeah, it is looking bullish. But yeah, just be nice to have that iron ore there, isn't it? You know. Let's just have a look at local BHP, see how that's churning out. This is just on the tick chart. I won't go to the daily chart today. So once again, we can look at this a bit dodgy, I know, so don't go throwing stuff, but 1 and 2, that's dodgy, but it's all, but the good thing here is that we've got that 3-wave correction, so that helps me like cement that in. And then here 1, 2, 3, 4, 5, the 3rd wave, 4th wave, and now we've got this 5th wave here. So that's 1 and 2 in here, and 3 and 4, and 1 and 2 and 3 and 4 and 5. So that's going to correct back here as we were looking for yesterday here. We could probably push that up a little bit, but we can work all that a bit later. So it does appear that we, you know, this is our first little 5 waves. So we took a position here. Things were looking good, so we cranked it up a bit here. So it's possible over the next couple of days that we're going to see something like this. Now, it may come a bit deeper down here to try to cover that gap. So we talked yesterday about taking some money off the table, like selling into the trend. So maybe, I didn't say selling into the trend, but I did say I've obviously put the little percentage thing here. So, but it looks quite good. At the end of the day, we have 1, 2, 3, 4, 5 here. So it doesn't matter how deep it comes. We should be going higher, you know, and we will be looking to go long on the 40. That's what we're looking at, and we will also be looking to go long on top of the B wave as well if we get if it shows up nicely, because sometimes they don't, you know, like I said, easier said than done, Pete, you know, but sometimes sometimes it's readable quite easy, but other times it's not. Yeah, okay, well that's that. I won't harp on too much. We just got to keep gathering information. And yeah, so Rio. So we got a position in Rio, which was really high risk because of we had that first impulse wave there. Really, that was about it. And we're just having our fingers crossed to see more, but this could just drop back down. But the thing here is that we have to look at this as 1 and 2 and 1 and 2. But at the same time, this could be corrective. We could even get another move up here, right? And because it could be part of this one as 1 and 2. No, that's 5 waves, A, B, and C here. Yeah, sellers drying up. So I've only got 3 waves. That's the risk here for that, unfortunately. But what we could do is, if you're not in this market or you wanted to add to that, taking that top out will be the go. But we'll probably come back and cover this gap and check on this here. But I have to say, any move below, let's just cement this in here. If that low is breached there, that's as far as you can go, because if that low is breached, it forces this to be corrective. So it's a high risk game, this one, for Rio. And FMG, where is it? FMG, oh my God. Okay, so from the low here, also very high risk kind of game here we're playing, is that we've got 5 waves up here. We've had a very deep retracement covering the gap here, and we're watching it build at this point. But it could certainly fail at this point because of what iron ore's got happening. But we did all the right things in terms of 1, 2, 3, 4, and then down here. So that's the low, half a position here. Look, we've only got half a position in, haven't we? So we don't need that high there, but we do need that over there. So the risk here is minimal. We're at the 50-60%. This is where it can fail, so we don't really want to go long here just yet. But it is looking impulsive up there as well, so that's all good. So we could probably look at this here. This would give us another buying op. I'll take that low there. Let's just say that the market moves lower either today or tomorrow, and if it moves up higher today, then we'll adjust it. But what I'm thinking is that if the market does move down here, then we can also copy that and put that there, and we can also go long from that point and still build in over here as well. So it's a process, and we're on shaky ground, but it's just the way the cookie crumbles. So if I covered everything, yeah, okay, I'll leave it at that. Thanks for tuning in. Cheers.